This is AI Command App News for Tuesday, July 7th, 2026. 5 stories moving markets and business today. First, the chip sell-off. Chip stocks fell hard today after Samsung Electronics reported second quarter earnings that actually beat estimates, but fell short of the market's sky-high AI expectations. After a 145% run-up in Samsung shares, a beat wasn't enough. The Nasdaq was the day's biggest loser. Micron, SanDisk, and Lam Research all tumbled, and the VanEck Semiconductor ETF dropped around 5%. Investors Business Daily points to the core problem. Information technology sector earnings are expected to grow 63%, a bar so high that even good results now disappoint. Why it matters: the AI trade is priced for perfection. 2 signals worth watching. Traders piled into bets on an Nvidia rebound even as the broader sector sold off. And Apple, no longer the face of the AI trade, is closing in on Nvidia to reclaim the title of largest US company, as Nvidia's valuation compresses to levels MarketWatch says haven't been seen since 2013. Second, Amazon. Amazon is raising at least $25 billion in a bond sale, its latest debt raise to fund massive investments in artificial intelligence, and it says it won't issue any more debt in 2026. Notably, the stock climbed on the news. Why it matters: hyperscalers are now financing the AI build-out with debt at a scale usually reserved for telecoms and utilities, and investors rewarded the discipline of a stated ceiling. For business leaders, the read-through is that AI capacity is being locked up by companies with balance sheets big enough to borrow for it, and this lands just as an internal Treasury report warning about the dangers of an AI bubble is making the rounds in Washington. Third, Microsoft. TechCrunch reports Microsoft is joining the AI cost-cutting trend by relying more on its own models rather than paying for outside frontier capacity. The same week brought deep layoffs across its gaming division. ID Software, the studio behind Doom, reportedly cut by around half. And CNBC reports Chinese models from DeepSeek and Z.AI are gaining ground with US companies as OpenAI and Anthropic costs surge. Why it matters: the era of unlimited AI spending is ending. When the world's biggest AI spender starts optimizing, model choice becomes a procurement decision like any other. Cost, flexibility, and the power to switch all matter. Fourth, Anthropic. Claude Cowork, Anthropic's agentic work platform, launched on mobile and web today. It was previously desktop only. It rolls out to Mac subscribers first, with other plans to follow in the coming weeks. The pitch: start a task at your desk, get status updates on your phone, and pick up the finished output later, even with your laptop closed. Wired summed it up as, "Shut those laptops." Why it matters: agentic AI is moving from a developer tool to an ambient layer over everyday work, and TechCrunch frames this as the coding agent wars spilling into the rest of the office. For businesses, employees will soon be running long-horizon AI tasks from their phones. Governance and data access policies need to catch up now, not later. And fifth, energy. The United States revoked Iran's oil sales authorization after tanker attacks near the Strait of Hormuz, with CENTCOM saying strikes have resumed. Oil futures jumped on the news. Why it matters for tech: energy is the hidden cost line of the AI era. Ars Technica reports that U.S. manufacturers' electricity bills are already soaring because of AI data center demand, threatening manufacturing expansion plans in the Rust Belt. Rising oil prices and grid strain act as a tax on both sides of that equation. The takeaway today: capital discipline is the theme. Markets punished lofty expectations, Amazon capped its own borrowing, and Microsoft is trimming its AI bill. The AI build-out continues, but the market has started asking what it actually earns. That's your AI news for today from AI Command App.